Rakesh, Reema here, morning, and wish you a very happy new year to you, your family, and everyone at Bajaj Auto. Just provide some more color on the January sales. We've got the numbers with us, but how did premium do? Mass market, what is the retail uptick looking like? And then the guidance and the outlook for the month of January.
Good morning and very happy new year to all of you too. December was a great month. Usually, December following on the heels of the festive period of October, November sees a big drop. We did not see that big a drop. And it was in line with our strategy, which has been to, as I've been saying, which has been to focus on the top half of the industry. And I think over there, even in December, we outpaced the industry in domestic motorcycles by almost 2 times. So giving a further expansion of market share in that very strategic 125cc plus segments. The newer businesses like Chetak did well. We continued to garner market share, and supply chain kept expanding its performance. So we breached the 10,000 mark from a registration point of view in December as well. So that was very good. There was no sort of fall off in the Triumph sales, which also again augurs well for the coming months and quarters. So December retails were almost entirely equal to the festive period, November period sales. The three-wheeler business, keeps marching on with its market share at 80%, expanding the CNG and growing the electric three-wheeler component in the business also. Exports, a marginal improvement in the quarter over the quarter 2. So we are hoping that the macroeconomics and the geopolitics starts to turn positive in the coming quarters. We are well positioned to harness any improvement over there. But for the moment, it's a watch out. We are still watching the export front.
All right. Good morning, Mr. Sharma, and good to see you in. Wishing you the best for 2024. Nigel on this side. Well, I want to ask you about the exports. I understand your various parts, brokerages, they were wondering whether or not there was some container issue which was impacting exports. It could be temporary in nature, but is that true?
Yeah, good morning, Nigel. Happy New Year. You're right, because of the little fracas in the Red Sea, we did face some disruption, and the shipping companies have been quick to increase the freight rates a bit. But you're also right in observing that it is not going to last, but for the moment, yes, shipments were delayed to some parts of Latin America and Africa.
Okay, all right. And also with regard to exports, as you said, it's an improving trend. Of quarter 3 will be better than quarter 2, and quarter 2 was better than quarter 1. You expect the improvement to continue? If you could give me clarity on that, point number 1. And point number 2, since you're outpacing the market, what is the updated market share in both the categories, the 125cc plus as well as the domestic market?
So certainly we expect quarter 4 to be better than quarter 3 in exports. But, the caveat is always the volatility in the currency market, which seems to be easing up to some extent. But then you also saw things like the major devaluation in Argentina, which is an important market to us, for us. And Nigeria also still a little bit restive over there. So, however, like you said, the trend is the things are calming down. Now, what's the rate at which things return to normalcy is something which we can only wait and watch. But I expect quarter 4 certainly to be better, marginally better than quarter 3. In the
domestic market share you're giving us,
So the second question which you asked, our market share from a retail registration point of view in domestic motorcycles in the top half of the industry is now running at 31-32%. So it's very, very close to leadership. I don't have the exact numbers as to what happened in the last couple of days. But that's the region in which we are operating, and we are, of course, looking at a #1 spot in the months to come. We're well positioned with the entire Pulsar range now almost refreshed, and a few more launches going to hit the market rapidly between now and April, every month almost. So there will be a lot of activity, and I think that should provide us a good boost to rest leadership of that segment.
Just getting back to that point about exports, and did you lose any? Was there a loss of sales on account of the Red Sea disruptions? You all did exports of 1.35 lakh units in December. Would that number have been higher if it weren't for this disruption?
No, not really. And there was no loss. There are some delays, but there are channel stocks. So as yet, the disruption has not affected us materially.
And what's been the total Triumph sales so far for you now since its launch, and what are the bookings looking like for the future?
Well, the retail number is about 2,500 units. We are running at that rate, which is what the number for November was also. And this is, in the 45 odd stores which have been sort of newly launched. So it's not an all India number. And quite significantly, some of the areas we are already starting to see market share of 15 to 20% levels. Again, from a Vahan registration point of view, in important markets like Kerala, we're not there across Kerala, but Trivandrum, Cochin, we are striking above 15%. Bangalore, certainly above 15%. So wherever the store footprint has expanded and people have had the time, like say 2-3 months, to sort of start talking about the brand and activate things locally, we are seeing a very good movement in our market share. We will continue to expand, and we are hoping to sort of close the next quarter by almost doubling the store network which is there today, and that should sort of boost our retails quite a bit.
Mr. Sharma, finally, just to end with, let's get a big picture sort of projection for you. We are speaking on the 1st of January. I think for the calendar year that's closed out, I mean, total sales were up about 7%, with some recovery in exports. At this point in time, do you have some rough projections that perhaps we could work with? The new normalized run rate for exports, I mean, will it continue to be in this vicinity of 1,35,000? And also just give us a sort of a crystal ball look ahead. 2024, is it going to be more about rising volumes? What about competition? What about just the way you think pricing trends will play out, particularly in the premium end, which is where, of course, Bajaj has a lot of dominance?
Well, I can say that, as we enter 2024, I must say it is, after quite a while, very promising from where we are standing, both from an industry point of view. Our class of customer seems to have returned. There is certain optimism, and there is a little bit better purchasing power. So the economic recovery is finally reaching our class of customers. We are very well positioned in terms of, I just spoke, a refreshed new range, a very throbbing pipeline of products which are going to hit the market. And what happens is, whenever there is optimism in the market, and with that backdrop, new product introductions always get you a lot of mileage. So to that extent, the ducks are pretty aligned as we see it for the forthcoming months. The newer businesses like Triumph and Chetak, which we really started to get our sort of supply chain and our front end in position, they've got validated, accepted, and we are now looking at a period of scale up now. So we are from, getting our act right and getting the basic apparatus right. We are now moving into a phase of scaling up these newer businesses in 2024. The exports recovery, like I said, is really, there is not much we can do, and we don't want to sort of do things which will counter macroeconomics. I think, we have steadfastly kept to our pricing and margin profile because we don't want to use that bit to counter exchange rate volatility. So from a mix and from a margin point of view, the export business is extremely well positioned. It's just that the volumes now completely depend on the recovery of some of these key markets, which a few green shoots are there. So when you put, and on the other side, at this point of time, we are not seeing a huge pressure from, or we're not seeing a pressure from the cost side. So when you put all these things together, it does look promising.
Yes.
My fingers are crossed. There shouldn't be any geopolitical or macroeconomic disruption. We should navigate the election period properly.
Sure.
And it looks like a good time for the industry.
Thank you, Rakesh, for joining in. All the very best for 2024.